Hello, I'm Dr. Cheryl Dunn, here to demonstrate an intermediate financial accounting problem for a fictitious company called Terrapin Lakers. We're given information about Terrapin Lakers' sales and accounts receivable, and we're asked to calculate their bad debt expense under two different methods. The first method is the percent of sales method, and the second method is the percent of receivables method. Take a look at the problem. Pause the video for as long as you need to read it. Okay, let's start with the information that we're given. We're given accounts receivable at the end of the year as $630,000, and we're given the allowance for uncollectible accounts with a debit balance of $14,000. Now, keep in mind that the allowance account is a contra asset, and normally it has a credit balance. Normally it decreases accounts receivable. The reason sometimes an allowance for uncollectible accounts can go debit is because we don't estimate perfectly our bad debts for each year. So our write-offs will end up decreasing our allowance, and our estimate for bad debt expense increases our allowance. If then our actual write-offs are more than the allowance that we set up, the estimate that we made, then the allowance will end up with a debit balance. So the fact that it has a debit balance here means that we've written off more accounts than what we estimated that we would. We'll end up fixing this with the bad debt expense adjustment, most likely, depending on the method that we're using. Okay, so we're asked to calculate, first of all, the bad debt expense for the year, and also the net realizable value of the accounts receivable at the end of the year, once our adjusting entry is made. Okay, using the percent of sales method, they said to assume that 4% of our sales will be uncollectible. And we had sales of $7.2 million. So that's the sales, and if 4% of those will be uncollectible, then that means that we expect to have uncollectible sales of $288,000. That would be our bad debt expense under the percent of sales method. And our net realizable value of accounts receivable, we would calculate that by posting this entry for bad debt expense to the allowance as a credit, which would give us a balance of $274,000. Our net value of accounts receivable then is the $630,000 in accounts receivable minus that allowance of $274,000. And so under this method, it would be $356,000. So those would be our two answers if we use the percent of sales method. If instead we use the percent of receivables method, and it tells us to assume that 12% of our accounts receivable are uncollectible, then we take a slightly different approach. So I'm going to create a different allowance account so that we can see the difference. We're still going to start with the $14,000 debit balance. But in the percent of receivables method, what we're going to do is we're going to calculate what we want that allowance to be, and then we're going to make the bad debt expense entry be whatever it needs to be to make that allowance end up with the balance that we want. So under the percent of receivables method, we're told that $630,000 times 12% is what we expect to be uncollectible of the receivables that we have. So $630,000 times 12% gives us $75,600. That's the dollar value of the accounts that we think we will not be able to collect. Therefore, that's what we want to be the balance in our allowance account. And of course we want that balance to be on the credit side. So if we want to end up with $75,600 on the credit side, then the entry that we need to make for our bad debt expense is going to have to credit the allowance enough to make it go from $14,000 on the debit side to $75,600 on the credit side. And it turns out that's going to end up being $89,600. So our bad debt expense under the second method is going to equal that $89,600. And then the net realizable value of the accounts receivable is going to be the $630,000 minus that amount that we expect not to collect, which is our ending balance in the allowance. And that equals $554,400. So there's our bad debt expense, and there is our net realizable value of the accounts receivable using that percent of receivables method. So you see the two methods will vary as to bad debt expense and the net realizable value of accounts receivable. So it's important that companies make these decisions carefully, which method they're going to use, which is most appropriate for their company. That concludes our demonstration of the two different methods for calculating the allowance for uncollectible accounts and bad debt expense. Thank you for watching and have a wonderful day.